So how will these stocks do in 2025? Let's ask Doug Clinton of Intelligent Alpha and Deepwater Asset Management. Welcome back. Good to see you, man.
You too, Scott. Merry Christmas.
So Merry Christmas to you as well. Thank you. We did tease the fact that, you know, the stock that you think may not be at the very top of the list next year, and it's NVIDIA. Not that you don't like it, you just think others may have their moment.
I do. I think if you look at the last 2 years, Scott, in terms of the AI trade, it was all about the hyperscalers spending billions of dollars on CapEx to build out really general purpose AI compute. So that was them investing in NVIDIA's top of the line chips to train the models, the AI models that they're building. I think as we go into 2025, that theme shifts to one of custom silicon. And the reason for that is now that all of these companies kind of have built out their general purpose infrastructure, I think they'll start to leverage a lot of the custom chips that they've already been building. So Google with TPUs, Microsoft, Meta, Amazon with Trainium, they all have their own custom silicon that they've been developing. And I think they're going to be more aggressive deploying that next year. And ultimately what that means is good for suppliers like Broadcom, who works with most of those companies. And it could be good for companies like Marvell as well, which is another stock we own at Intelligent Alpha.
Even so, what happens at the moment that NVIDIA fails to live up to the amazingly lofty expectations?
I think that if you look at just the AI trade relative to the .com trade, people often make parallels, and I think sometimes they're useful. And in this case, you look back to the .com era, Cisco, I think, was sort of the poster child. NVIDIA is our poster child today. And it is generally, I think, a barometer of just how people are thinking about the trade. And so what I think we could see happen is at some point next year, and again, NVIDIA is still a top holding for us, but at some point I think you could see NVIDIA maybe falter a little bit. And some of these other names, like a Broadcom or like a Marvell, might pick up a little bit more momentum. The sentiment then may be that, hey, the AI trade's over, you know, NVIDIA is done and therefore it can't keep going. I think that would be a mistake, though, because the AI trade is not just about NVIDIA, it's about many other companies. And as it continues to evolve, I think we kind of broaden out and see more companies work just like NVIDIA has the last couple of years.
I mean, do higher rates hurt the growth trade, or do they just push people back to the biggest stocks in the market like they are right now?
I think it could push people back to the biggest stocks, but also I think it will push them to some of the AI players that have the most growth potential as well. So again, if you look back at that .com era, for most of the 90s, the interest rates were 5 to 7%. The 10-year was around 5 to 7%. So well within where we are today, in fact, a little bit higher. And so there's no rule that says we need low interest rates to have technological innovation happen at a great scale. But I think if you look at what are the companies that can push through potentially higher rates or persistently higher rates than we've seen for the last couple of years, certainly it could be the mega caps. They've already shown that they can do that. But I also think you could look at potentially some software names that start to get an AI bid. Snowflake is one example, again, another holding of ours that has talked more about an AI story. And I think companies like that who can say, you know, hey, we do have a play in AI. We're on the software side. Customers are starting to deploy us for AI use cases. They might have a case to work next year, too.
What do you like most outside of tech? We always identify you as a tech investor, and I feel like 99% of our conversations are about that sector and those stocks. What do you like outside of there?
It's certainly where I spend most of my time. But at Intelligent Alpha, we do use AI to look much more broadly than just tech. And one contrarian idea that AI has been on for the last several months, it hasn't really worked out so far, has been the energy trade. And in using our AI models to make predictions going into 2025, one prediction that AI has made is you could see oil hit $100 a barrel. I don't think anybody has that on their roadmap, and so it's certainly contrarian. If it happens, I think the oil trade or the energy trade in general probably works in a big way. But stocks like GE Vernova, not dependent entirely on oil, but I think in terms of infrastructure build out, green energy will continue to be a theme, and then Schlumberger are two that are larger holdings in our portfolio currently.